Are robots smarter than humans when it comes to investing? What happens when AI gets involved in managing your money? Let's debunk the myths and reality of Robo Advisory on Maverick Dreamers and Thinkers.
Well, I have a wonderful electronic invention I want you to see. It looks something like this.
Hi there, everyone. I'm Chloe Cho. Thanks so much for tuning in. Financial advisory is being disrupted in a way that's never been imagined as digital chatbots, artificial intelligence, blockchain, cloud computing, and big data make their way into wealth management. Robo-advisors extend the passionate debate in global financial markets on whether passive beats active investment styles. The rise of passive allocation reached a milestone in late August this year, with assets in value in U.S. indexed funds exceeding those in actively managed funds for the first time. Robo-services are transforming the investment management space by drastically reducing fees and making financial advisory possible even for the mass market. Here, we're talking right down the spectrum to even those with a mere couple $100s or less in their bank accounts. But just as investors have been obsessed with whether passive beats active in returns over the past few years, can robo-advice beat the market? That's what we're about to find out from Bambu, a B2B robo-advisory service based in Singapore. Bambu proudly states on its webpage that it has clients in every continent except for Antarctica. Bambu's founder and CEO, Ned Phillips, came out of semi-retirement in Bali 4 years ago to shake off a sense of restlessness and realize his tech vision when he struck up a partnership with his co-founder, Aki Ranan. Ned and I meet in Bambu's Zen meditation room as we sit on the tatami mat, facing each other across a low table. Hi, Ned. How are you doing today?
I'm good, thank you. How are you?
Thanks so much for joining us.
No problem.
All right, so let's talk about robo-advisory. It sounds like something that's so out of a sci-fi flick. What really is it?
It's a topic that I wish had a different name. So robo-advisory, correctly as you say, everyone assumes that it's a robot that's giving you advice. That seems to make the most sense. But that's, not unfortunately, but that's not so much what it is. The reality is, so the term was coined to talk about really automated financial advice. So everybody wants to have a better financial life. Everybody would like to save a bit more, earn a bit more, retire a bit earlier. So when this term was coined, I actually really don't know who the person was, but I think it isn't so much about rocket science or the future. It's actually about today. And what it really is how can we use technology and our digital devices to have a better financial life? How can we have better financial goals? How can we save more? And happy to discuss more about how that works. But really, it's starting from the simplest point of reference, which is, can we use technology to help us all have a better financial outcome through saving and investment?
I guess the most prevalent question that you get asked is, can you beat the market?
All the time. And I have one answer. If I had a robot that could beat the market, I'd keep him at home, keep him in a cupboard and feed him my money. Yeah, the idea. So the one thing that's never changed is markets. Markets go up, markets go down. Anybody who can beat the market, it's a pretty rare feat to be able to do that. They either just manage their own money or they perhaps run a hedge fund of some description. But as John Maynard Keynes said, in the long run, we're all dead. So, and the other point that he said is, markets can remain irrational longer than we can remain alive. So beating the market isn't the point. The point is that, maybe I'll ask you a question, Chloe. How much do you need to retire?
I have no idea because, I don't know, at least $1 million, I would say. That is depending on how long you live, right? Because I think 70s, 80s used to be sort of the usual lifespan that people would look at. Today, I think people are going strong at 90 and even 100. We're all turning Japanese.
We're sitting in the Japanese room, so we are slowly turning Japanese. But the reason I asked you that was not particularly just to get the number from you. Clearly, Chloe, you know a lot about finance. You've been in this industry. You've talked to a huge number of people. And yet, even for you, you struggled to give that exact number. It's not an exact science, right? So imagine for your day-to-day person who understands that they need to save. We all understand that at some point we would like to achieve our financial goals. But what is that number? So it's really about the two different parts. What is the number? And it doesn't matter exactly what it is, but just to have the right idea. And how do I achieve it? And so the idea is, can you use technology? And when I mean technology, something maybe just as simple as, well, not as simple, but the mobile phone that today we all take for granted. Imagine on your phone, it could track how much you were spending, knows how much you're getting paid, and could see that perhaps you had $100 a month left over. Well, we should start saving that. And it could automate that savings to say, hey, we can see month on month you have about 100. Would you like us to automate that saving? That's not about beating the market. The greatest challenge is that most people just don't even start saving. So rather than investing, if you think about it, there's probably three types of people: spenders, savers, and investors. You can't go from spender to investor, because if you have no savings, you can't invest. So you have to get people from spenders to savers. And if you can just start to automate people's habits by saying, look, here's a good financial plan. People like you, let's say you're 30, you live in Jurong in Singapore, you have one kid, you earn $5,000 a month. We can start to show you what people like you are doing. So for Bambu, we're a B2B company. We design and build these digital savings journeys for banks actually all over the world. And that's the real message. How can we improve people's financial behaviors and also how they save? And I think if we do that, that would be a good outcome for everybody.
There's this perception that Robo-Advisory is something that's out of the ordinary, that there is this huge supercomputer that somehow does the wonders. Is that a myth?
I wish there was a number above 100%, because that's how much of a myth it is. But I've learned through mathematics that 100% is as good as it gets. There's no supercomputer. Like, I am sure there are people beating the market with supercomputers somewhere, but they're not rolling them out under a Robo-Advisor. That's not how it works. Just think about this. So 10 years ago, most banks didn't have a digital banking app. Today, it's unthinkable that a bank wouldn't have a digital banking application. We all do online banking. We take it for granted. And think about stock trading. 20 years ago, we all used a broker. We didn't go through an app. How many people use a broker today? But think about wealth. If you have enough money, call it hundreds of thousands, a financial advisor will call you and talk to you, and you'll get service. If you've got multi-millions, a private banker will call you and you get service. If you have $10, so I have a 20-year-old daughter, she has $10. No one's interested. In my mind, it's never about this supercomputer beating the market. It's about making, saving and investment available to all.
Previously, you had to have, at least the entry level would be $500,000, hundreds of thousands, so that guys like Morgan Stanley or Credit Suisse, UBS might be interested in you. But certainly digital banking has broadened the spectrum down the echelon, whatever the number is, right down to people with a couple $100 in savings. But I guess it's really the whole notion of, passive versus active, and the results that ensued in the global financial markets. And people think, wow, Robo-Advisory, somehow there's this robot, driven by AI that is going to do all the work, all the heavy lifting for you. Why is there such a misperception?
I think there's two reasons for that. Number one, as we discussed, purely the name, Robo-Advisory. I mean, again, if you didn't know this industry and somebody said it was Robo-Advisory, you could hardly be faulted for thinking there was a robot giving you advice, right? So I think just in the name of it itself. But where AI really comes in, so I'm very lucky. My father, who is 82, has been involved in artificial intelligence for 50 years. He's one of the world leaders of artificial intelligence. He's worked with all the greats of artificial intelligence. And what we've learned about that is that clearly we're still at the start of whichever revolution we might be in terms of, artificial intelligence, but it can help us massively. But I don't think it helps us to pick the right passive or active strategy. What I think artificial intelligence could do would look through all of your behaviors previously. So you've brought this product, you spent this money, you've saved this much. It can start to form an opinion based on your holidays, your credit cards that you may have, and use artificial intelligence to learn, what do people like Chloe generally do? What have they done in the past? And what is the best path for Chloe going forward?
Yeah, they're not going to tell you, go into index funds, go into the S&P 500 at 2,500 or stuff like that.
If we could tell you, hey, Chloe, this is the optimal behavior for you going forward, start saving this amount of money. And here's where AI can really work. So this is the one piece of Robo-Advisory for everyone out listening. This is the real challenge. So yeah, to my point, AI beating the markets. There are companies who do it. Very famous companies who do it, but they do it for themselves, which they should do. You earn you have $1,200 a month. What if you have 3 goals? Retirement, kids' education, and a car. They all are needed at different times, and they all have different amounts and different levels of risk. So let's say you have $100 for 3 goals. Do you save $33.33 for every goal? It's not going to be the optimal outcome because your kids' education, the time they go to university, isn't changing. Like if your daughter's 18, she wants to go at 18, or if in Singapore, your son 21. But your retirement, you can put that off a year or 2 here or there. The amount you need is flexible. Where AI really comes in, so what we found out today is most people achieve their first goal and their second goal they don't get. What if we could work out what was the optimal amount to save, including also which products to put it in at the best, cost to achieve your financial goals? What if we have a future where everyone's able to achieve the majority of their financial goals because they have better AI that helps them to plan, spend, and invest smarter?
When you look at the hugely successful robo-advisors in the United States, because already it's entering like a decade mark there, right? You've got companies like Betterment, Wealthfront, Ellevest, which is more geared towards women. And then when you look at some of the feedback, what they end up doing is simply putting whatever money in index funds, ETFs, and the dividends get taken away by the robo-advisors. And at the end of the day, in a bull market, their funds are never positive. So how do you get that?
I haven't, looked at all of the feedback. Certainly the AUM is getting higher. So I think what the Betterment has done recently, they've launched a money market fund, so like a savings product.
Right.
So wouldn't say guaranteed return, but principal is maintained. We're at the very beginning of robo-advice. I guarantee you, if you look back 10 years ago, when the first digital banks rolled out their digital banks, people complained. So I've been in fintech 25 years. So we built an online stock trading tool back in the 90s. If I look at it today, it was terrible. But at the time, we thought it was amazing. We thought it was the best thing ever. Dial up, super slow, graphs that didn't load, not real-time transactions. So are robo-advisors at the best state they could be? Absolutely not. Could they be better? Absolutely. But, for me personally, and I'm definitely biased, I wouldn't be sitting here today with this company, best job I've ever had, most fun I've ever had, without Betterment and Wealthfront. They defined this industry. Betterment, Wealthfront, Nutmeg in the UK. These guys went out and said, wealth should be digital, it should be easy, and it should be low cost. They never said they would beat the market. Everyone else said that.
Oh, that was sort of the hype and hope.
What they did say was, hey guys, we are able to go into whether it's passive or active. We'll try to find the right products, and we'll give you an ability to save and invest for your future and achieve your financial goals. So I sometimes, read these articles. Is Roboadvisor overdone? I mean, I think when we met Chloe at that Saxo event, we were at an event with 200 people, let's call it, all in fintech, all right in the center of fintech. I asked people to put up their hands who has a robo. 5, 7, maybe 10 did, right? You walk out in the street here, I'll challenge you. You walk just outside the financial district in Singapore, walk on Orchard Road, stop 100 people, ask them who has a robo-advisor. You'll get none. You might get one. Not because they're bad. It's brand new.
Yeah, it's taking off slowly.
When I started Bambu 3 or 4 years ago, people were like, wealth will never go digital. I'm like, just think about that. Wealth? Remember we were told music? You remember who was before Spotify? Remember the guy? Napster. Right. Now, obviously, they did it in a different way. They really challenged. But remember when we had cassettes? Music on a digital player? What? So, again, I have 2 kids. They haven't watched TV for 4 years. They watch Netflix. They watch YouTube. But scheduled TV? It doesn't exist. So I remember when somebody said to me, wealth will never go digital. It's always going to be financial advisor-led. And I want to be clear, financial advisors still have a great career. There'll be way more financial advisors as long as they embrace digital. We here at Bambu, we cannot keep up with demand. The amount of banks, because we're B2B, we build for banks, we get calls every day from financial institutions wishing to go digital with their wealth offering. This is a 10-year, and again, I'm biased, so I know people will say I'm in the middle of it, but I've never seen a less crowded, more competitive, huge opportunity space as this.
So for you, the upside is huge because in Asia, it's just taking off. For some of the big banks, financial institutions that had to shut down their robo-advisory, you can think of companies like Investec, ABN AMRO, UBS. Why did they have to close down? Was it simply not being at the right place at the right time in the past year or two?
Obviously, I cannot speak directly for each one of these. And I don't know the exact number, but just looking at what we do. So we've built for about 20 banks in the last 3 years. The number that shut down compared to the number that start, the ratio is still massively skewed to more starting, some closing down. The biggest reason that I always think a business fails is not enough customers. So here's the point. Build it and they will come is the least true statement I've ever found in tech. When you build it, no one comes.
How do you get people to come?
Marketing, digital marketing, branding, virality, in terms of, you go viral with your messaging. For Betterment and Wealthfront, I have such huge respect. Think about it. 10 years ago, no one knew them. How do you get customers to give you money when they don't know you? If you're a huge bank, like you mentioned, Morgan Stanley, Credit Suisse, HSBC, you have trust. You just have to have a good product. But when you're a B2C app, you need to have both. You need to build trust because people don't know you, and you have to have a great product. So why do they close down? I think, the general statement that I hear, not enough customers. And something else I learned, building robo-advisors is really, really hard.
Why?
No, of course.
I'm being very simplistic.
No, of course.
But if it's all about that digital platform, you just need some engineers. And if you have a plan, you execute.
I love what you said because that's what banks think. And then they try to do it, and it's so hard.
What is so difficult?
Why don't we build a robo-advisor together now?
Yeah.
What do you put on the first page? Do you ask for someone's email? Or do you give them a ability to tell them who you are? Hey, Chloe, we need to know about you. What's your age? Can you tell us your income? Hold on, I don't know who you are. Yeah. Building the journey, hard. Second thing is, again, we build in different countries, right? You have to then understand what are the regulations. Chloe's told us who she is. Now let's build that portfolio. So that's another challenge. Then that's the easy stuff. Then you have to integrate. So when you press a button on your robo, we have to get the money from your bank account. We have to go and buy the products. And when we're B2B, we have to integrate it to their current customer relation management system, custodial, brokerage. There are so many layers. So we've been doing it for 4 years. We've built hundreds. We have 140 bits of code that we can modularize to connect. We have our own AI. We have our own tools. It's still really hard for us. So I think banks go in and think, we just you just choose some portfolios, we connect it, and it's all good. A client the other day somebody we pitched tried to do it. They're a year in and they say they've got 10% done. I would say for a brand new team to build robo, 2 years. For a bank, 2.5 years to build a good robo. That's the reality.
Do you need to have thousands of engineers in places like India?
We can do it really quickly. We can do it in 3 to 6 months because we have all the building blocks. We've done it many times. We know how to do it. You learn by the mistakes you've made. So our very first robo we made, we were finding all of the trapdoors. Oh, well, don't do that. Do this. Don't do that. What's the right way to do it? It's a real challenge to build. So we put out a challenge. We put out our APIs to students here. So we did a hackathon challenge. We gave all of our building blocks to students to build it. None of them could do it.
So when you got started 4 years ago, what made you take the plunge? Did you see the trends happening in the US? I think you were back in Hong Kong then?
No, actually, I was living in Bali at the time. So I've been very lucky. I've had a great career in finance, 25 years in finance and fintech.
Financial trading, right?
I was more sales, so institutional sales. So I'm 52 now. I was 48 then. I was living for a year in Bali. I was semi-retired. Let's call it a late midlife crisis. And I was doing some fintech consultancy. And I worked for a company called 8 Securities. They're the B2C robo in Hong Kong. They're my former E-Trade colleagues. And what they asked me to do was, they were B2C, and they said, Ned, let's see if there's any B2B opportunities. So for about 8 or 9 months, I worked with them, and we had a huge amount of demand. But what I realized is B2C and B2B is very different.
Right.
If you're B2C, you're building your own product just for you. If you're B2B, you're building for clients. And it's 2 very different tech stacks and skill sets. So I was so as a sales guy, when I was at 8 Securities, people were calling us. Like that never happens when you're sales, right? Your phone never rings. You have to call. And then I met my co-founder, Aki Rannan, who is a visionary tech dude who knows how to build and deliver. And then we were like, oh, he build, I sell. That's it. Fintech. Someone's got to sell it. Someone's got to build it. And I was 48 and I saw all these young kids, 25-year-olds running fintechs. And I was like, I can do that. That was it.
Studies have shown that startup founders in their 40s, late 30s and onwards and upwards, they actually have a much higher chance of succeeding than the 22-year-olds in sneakers and T-shirts.
I did see that. I think it was like mid-40s, 40s. So I'm a little bit older. But because we're selling B2B. So we have clients today like HSBC, Standard Chartered, Franklin Templeton. I think as an older guy, obviously, I used to run E-Trade here. I've been CEO of a couple of companies. My peers are people who have good positions at other. So I could call these people and go, hey, I've started something new. Are you interested to see it? I think we've been very lucky to get a combo right. Like you came into our office. So pretty cool people in hoodies, real kind of startup space. But then me, myself, come from a more traditional finance background. I'm ultra competitive. I really like challenges. I really like risk. And I just saw everyone else doing fintech, and I was like, I just have to have a go. And when me and Aki got together, I was like, this is it. Let's do it. Let's go. And I've been so lucky, me and him as founders, we disagree on so much, yet we've never had an argument. We always laugh and joke, and he knows his stuff, I know my stuff. It's been a fun journey.
Bambu is now already a Series B startup, and some of the big investors include guys like Franklin Templeton. How do you get to that stage in a relatively short period of time? Because there are so many startups, but the reality remains that 9 out of 10 fail.
I think you're being generous, Chloe. It's maybe 9.5 out of 10,
Yeah, I've
right?
heard that. Some even said 9.9 out of 10.
This is going to sound a little harsh, but I'll say it anyway. The comment I made 10 minutes ago, build it and they will come. I think people really believe that. Too many companies in tech, I'm just talking about tech. Actually, maybe I'm talking about all startups. And people think if you build a business, people will come. Nobody's coming. Here's the thing. I'm old school, right? I don't think cold calling is as effective now. But I tell people, you see the phone here? Shake it and money falls out. People are laughing. I'm like, no, you have to go out and sell. I've nearly done 2,000 sales meetings since I started this company. When we did Series B, we met 140 VCs. No's are no problem at all. Somebody tells me no, I smile, I carry on. Relentless positivity and relentless sales. And if you do 1,000 sales calls or 1,000 VC meetings and everybody says no, it was a bad idea.
You just charge ahead.
I think thinking is the enemy of action. We know what we do. We're good at building digital wealth. And we call and we pitch and we call. And like when you came in, so we've won a lot of awards.
Right, I saw that.
We enter a lot.
Congratulations.
We market very heavily. People call us now. So we haven't made an outgoing sales call for a year. So how do we do it? I think we sell a lot. We market a lot. We are clear that branding, nobody in the street's going to know Bambu. That doesn't bother me. But at the FinTech Festival, people know Bambu.
Getting into the psychology a little bit, because when you talk to a lot of startup founders, getting a no, 10 times, 20 times, 200 times, at some point that starts to hurt you. How do you not fall apart?
Generally, I'm a positive person. I don't know where that positivity generally came from. That's just part of me. 2 reasons. I used to be an insurance sales guy, door to door in London. So when I was 22, 30 years ago, before internet or phone, I had a phone book. Remember the phone book? The
yellow
pages or the yellow pages? I was selling insurance commission only, so no base. We had to do 40 cold calls every morning, 5 meetings every afternoon. And then in the evening, we walk on the streets and we knock on people's door when they're having dinner and ask them if they want insurance. I did that for a year. You're knocking on people's door in the dead of winter. They're having dinner. Hi, I'm Ned from, I used to work for a company called Allied Dunbar. I'm Ned from Allied Dunbar. If you thought anything about your insurance needs, anything I can help you with, click goes the door, click goes the door. I was getting hundreds of no's a week. I cannot begin to tell you how privileged people are to be able to ask VCs for money. Think about it. You're selling to people whose job it is to buy something from you. You want to get a real no? Knock on someone's door who wasn't expecting you, who doesn't want your product, who's in the middle of dinner or a family situation. That's real no's.
After a lot of no's and 3 name changes, Ned and his team decided to call the company Bambu, but spelled with a U at the end instead of the double O's. The idea was that money would grow and the business would be solid and flexible, much like bamboo trees. 4 years into operations, Bambu is on a more stable footing, having secured $10 million in Series B funding a few months ago with backing from Franklin Templeton, among others. Bambu is considered one of the leading robo-advisors in Asia, where digital wealth management is steadily growing, taking a lot of cues from the United States, where the service has been around for a decade and continues to evolve based on market demands. Hybrid forms are increasingly becoming more popular in the U.S. as human advisors are being integrated into digital platforms. U.S. market leader Betterment has struck up a partnership with Dimensional Fund Advisors to offer that human touch, and similar moves are seen by top European robo players such as Nutmeg and Scalable Capital. Do you think that some of the examples that we see in some of the more mature markets like the U.S., it's helpful for you because you kind of know where the road is heading?
Yeah, I really agree. And robo isn't a binary outcome. It isn't all tech or all humans. So for the more high net worth, as we were discussing, if you have 500,000 or millions, you will still get a human with digital. If you are like my daughter who has $10 to save and invest, you will just be digital. So I do think that it is still hybrid, right? The markets, and if you have $1 billion, there's going to be a very good private bank that's going to wine you and dine you, right? We really love to see that the betterments and wealth funds are becoming more B2B, partnering with banks. Because for us, no customer will ever see Bambu. We just build the technology for our customers, right? HSBCs, Standard Chartered, Franklin Templetons. We really think that it is the financial institutions who can win this digital wealth space because they already have the customers. Their real challenge is perhaps not the betterment or the wealth front or the more, like Elvest, which has done a fantastic job, or SoFi, which went after students. It's the Grabs, the Gojeks, the Alibabas, the Tencents. I think these super apps, and as we've seen recently, Google launching a saving and investment actually, they called it Cash, C-A-C-H-E, which was the first name of Bambu. So we were called Cash before. We decided we didn't like it and changed it. Maybe we should have kept it. Now Google has it. But I really believe that what Betterment and Wealthfront have done and are doing is adapting to the changing environment. And yeah, if you're a bank, you really have to be nimble right now.
Everybody is heading into this digital space. So if you look, even guys like DBS in Singapore, which is considered sort of the big, large and straight-laced, they're also going digital. So the question is, since everybody is moving in that direction, how is your product offering differing from somebody else if everybody is charging 0.25% for the basic rate, basic commission fees? How do you make a difference?
That's a great point. And I will say with one thing with DBS, Piyush Gupta, I think they've done a fantastic job of really leading that charge. And that's what it takes at a big bank when the CEO stands up and is incredibly clear. But to Robo, so for us, the amount that you charge cost is never a differentiator in any industry, I think. Do you wake up every morning and think, wow, I wonder if I should buy a balanced equity portfolio today or a diversified bond portfolio? The biggest change, I think, that Robo and the differentiator is smart goal-based planning, right? So a lot of what we build is not just to say, should you buy an ETF or what should you pay? Because in the end, it's our client who decides what product they're selling. We just build the tech. And maybe this is where I can suggest what the Robo endgame is. Today, wealth is based on this premise that you, the consumer, know what you want. You know your risk, you're 1 out of 10, you're conservative, whatever. You should know the amount, and you know how to save every month. The reality is people don't know that, right?
Right.
I don't know, I know what I am. I'm a 10 out of 10 risk. I run a startup at 53. I'm taking all the risk in the world, right? But we think it ends up as a one-page wealth journey. And that one page is, hey, Chloe, so let's say it's 10 years' time. Your salary is getting paid into a digital bank. You're spending from that digital bank. And everything that happens is coming from one application. We have put together a plan for you that we believe, based on all the data and everyone else, is the right financial plan for you. Swipe right to accept this plan. That's coming.
So at the end of the day, it basically democratizes the notion of wealth management, regardless of how much you have in the bank.
Exactly. Now, here's the fascinating thing. Can anybody give me a logical, and apart from fees, what is a logical reason that the less money you have, the less advice you get? And the more money you have, the more advice you get? I understand why. because there's more money from more advice. But with technology, surely it should be democratic.
Thanks to Robo-Advisory, the asset management industry, the broader pool is getting bigger.
Much bigger.
Much bigger. So it creates different segments of the market that were essentially ignored previously. But on the flip side, for financial advisors, do many of them go out of work? How does that work?
I don't think so. So if you're a financial advisor and you decide going forward that you will continue to use just paper, just manual, you will not use customer data, permission customer data, I think in the end, you become less efficient and you will simply earn less money. Remember, financial advisors are commission-based, right? I actually think that what we end up creating is way more financial advisors because these young people like my daughter, she starts saving now. She's going to have money to invest, more of it sooner. I wish I'd started saving at 18. I didn't start saving until I was 35, right? Compound interest is incredibly important. So I think we create a whole new set of financial advisors who can handle a larger number of clients with data, who are not focused on product pushing.
It's about the volume game, I guess.
It's a volume game.
How do you think the world is going to evolve? Because right now we've got banks, we've got virtual banks, we've got robo-advisors who offer a similar service. And then you have all these super apps. I mean, in China, you see the disruption right away. You've got Alipay, WeChat Pay. Well, you've got combined 1.3 or 1.4 billion for using WeChat Pay and Alipay. And those two are a hugely disruptive force. And I guess it's sort of becoming a gray area.
My view is that the people who can provide the best service will win. That seems obvious, right? But so again, I come back to goals. So your bank, doesn't matter which one, they know how much money you have, right? But does it know your financial goals? Does it know what you're thinking? Probably not, right? It doesn't really know. It knows how much money you've got in the account. It knows what ETFs you hold. But it doesn't know why you're holding those. And you don't buy ETFs to buy ETFs. You buy ETFs or funds to achieve a better outcome. Whereas I think the super apps, whether it's Ali and Tencent, like you say, who have led the charge from China, or obviously Facebook, Google, Amazon in the Google in the US or in the UK or in Europe, do I think that they will be part of this financial disruption? Absolutely. I think, again, I know I mentioned my daughter too much, and my son as well, but they're 20 and 17. Do I think they will use a bank? I think they'll use the pipes of a bank, but then they will feel much more comfortable to use a super app. I'm 52. I grew up thinking, data. Our generation, my generation, has different thoughts about data. The amount of data my kids share is much higher. I think my willingness to share data for the return of service you get, instant financial planning, great financial outcomes, because it says, hey, don't spend that because you won't be able to save. If you have to save $100 a month and you have 120 left and there's a product for $30 and you buy it in the shop with cash, nobody can stop you. But an app should say, sorry, not letting you buy it. You're not buying that product today. That would be great. So I think 10, 20, 30 years' time, there'll be this cute concept that we had a standalone bank that was separate from our overall digital financial life. I think that'll be a cute, fanciful idea, a bit like cassette players and LPs. The challenge, of course, is regulation, right? If you're a super app, you look at some of the regulations and the fines and what has happened since the GFC. And again, you want to be very clear about how you enter that space. Data is incredibly important. And I think China's obviously, I think in China, people have accepted that with maybe some of that, the way that data is used is perhaps different from in the US, but you get if you use Alipay or WeChat, it's amazing. You can do everything on it.
While Ned receives calls every day from financial institutions wanting to set up robo-services, Bambu is not yet in the black. But Ned says profitability is possible by the end of 2020. Perhaps Bambu's B2B business model will help it get there much faster than its older robo-peers in B2C. It took top U.S. Robo-Advisor Betterment 10 years and a lot of venture capital money to break even, while UK online wealth manager Nutmeg has been struggling to turn its popularity into profit. The winds might be in Bambu's favor as it benefits from the Singapore backdrop as the city-state is out to emerge as a thriving regional fintech hub at a time when Chinese tech titans Alibaba and Tencent are setting the pace for emerging markets by creating digital wallets for some 1.3 billion users collectively on the mainland. As Asia witnesses an investment boom in big data, artificial intelligence, cloud computing, and blockchain to drive a broader shift in fintech, the riches generated from the digital revolution down the road might tempt Ned back into retirement to pursue his other passion, surfing. And this time around, he wants to settle for a deserted island in Sumatra of Indonesia instead of crowded Bali. Hope you enjoyed my conversation with Ned Phillips, founder and CEO of Bambu, a Singapore fintech. Thank you so much for tuning in. Really appreciate you taking the time and would be most grateful if you could subscribe and give us a quick review. Do make Maverick Dreamers and Thinkers a part of your weekly routine. And if you'd like to find out more about our podcast, go to www.brilliantmp.com for details. Until next time, to all the great dreamers out there, I'm Chloe Cho. Take care.